All right, market here a little bit. Again, we're getting these crazy little moves here. Very difficult for us to trade. It goes from 70 to 90, all in a jiff. And this is a not a bad move. This one occurred in 4 minutes. Yesterday, like I said, you had a 50-point rally in 2 minutes. Okay, crazy. But this is what's going on. So be patient. And again, it's very difficult for traders, individual traders, to be trying to compete with this kind of volatility. So you have to accept it and understand it, and just be patient and wait for things to settle down, or pick your spots and understand that you're going to have some drawdowns. And if it's too much for you, just be patient and wait. Things will settle down. Okay, if you look at the chat, you'll see the levels that we gave out this morning. Again, you have to trade this with a grain of salt, as they say. Be very, very careful. Resistance between that 05 to 10 area.
Where is our little buddy today?
Hey, there you are, Don. He knew it was going to be crazy, so he decided to stay away.
Oh,
I don't know. Yeah, I mean, this at least we're getting a little bit. Yesterday, we did not get a bounce whatsoever. At least we're getting a bounce here. This is way, way oversold at this point.
yeah.
As you can imagine. But this is what the market is basically pricing in something. That's what it's doing right now. It's pricing in probably pricing in a recession, even though the Fed was trying very hard on Wednesday when it came out with its results, and we had that big massive rally. Was to try to calm things down and say we're not going to raise 75 points. And I don't know how that triggered a massive rally, but yesterday said, you know what, that's BS. So we're coming right back down here. And that's what happens. Kind of crazy, but we're adjusting. The market here is adjusting to market conditions, just like it did when COVID started and we had those crazy markets. And we broke a lot, and now things are breaking down. At some point they'll settle down, and at some point they'll the market will react to the policy changes that are happening. And if we it's basically pricing in. Oh, look at this rally here. Like I stopped talking to you. He had, again, very difficult to trade this coming right up here. We got a little resistance in this area if you're a little aggressive. But you can see here, once it decides to go one way, it just goes. Doesn't really matter where, the fundamentals take over for the technicals here. And that's what's going on here. Look at this. Crazy. Look at this stuff. Everybody got caught short, and it's like crazy little red. You're going to get to that 50 before you even, in this fight. Look at this 5-minute bar. It's crazy, right? 35 points. And it's only in, can't tell you how not normal this is. I wish I could tell you this was normal. It's not normal.
I was looking for the 17, but well, you know, the 50 may be later, but not in the next 5 minutes.
Right? Look at this. It's amazing. This is unbelievable. Totally unbelievable.
6 bars down and 4 bars up.
Yeah, right. You get you get your rotation basically in 2 bars. It went from 70 to 20-ish, 70 area up to 20 area in 2 bar, 10 minutes. It rotated as a 50 S&P points in 10 minutes. That's insane.
I sure am glad it did that.
Oh, good. Good. At least
I was anticipating it, and I was trying to track. Yesterday I did that, and it just kept beating me up and beat me up and beat me up. I was too stupid to quit.
Yeah, well, I mean, that's we get like that, when you get to the point where you're fighting the market the whole day.
Yeah,
and I've been there, and you're like, you can't tell yourself at some point you got to sell it, because it just, how can you sell it? Because at some point when you decide to sell it, it's going to rally. Like, I knew this was going to happen. So you can't do that either. So you're like, when you're fighting it like that the whole day, you're like, it's terrible.
it's kind of like pushing a snowball uphill. It just don't want to go.
Yeah, when there's no snow.
Yeah.
So for some of you who are new here, this is Don. He's from Texas. He's been with me for quite a while. He fills in for me when I have to not be around, or I'm taking a break or out of town or something. He's always there helping me out. So I appreciate that. And Fridays, he likes to jump in here and chit chat with us a little bit. Nothing wrong with that either. I tell you,
I would say no, Philip.
Oh, that's funny. Yeah, see, the tractor, man. Mark has his slippers on the beach, and you have your tractor down in Texas. Crazy. Yeah, that's crazy kind of trade, I tell you.
You need to keep you a map of all the people that you've taught and put pins in them, because you've taught them from all over the world.
Well, that's true. I never thought about that, but that's true. I got Australia, and we know we had somebody from Australia for a while, and definitely the other side of the pond there. South Africa there. I mean, then all over the United States.
Yeah, and some in Germany. Yeah,
Germany. Yeah, we've had them. Yeah, we've been reached out here to a few places, few people. Well, everybody wants to trade, except sometimes you gotta. The problem, I mean, for some people want to trade, but they have no idea what they're doing, or they think they know what they're doing, and by the time they reach us and then they realize, but we try to help them, they already have their doubts about trading. Just the way things are. It's been like that forever. By the time they find us, they're like, oh, I've been doing everything else. Again, we've been doing this for a while. We have, I've been trading on the floor of the exchange, and now we're off the floor. Now we're trading here. From home now. We used to trade on the floor, but unfortunately, they closed the floor down to traders, so can't do that anymore. they did shut the floor down. They had somebody was in there. They tried to get on the floor. We all had passes to get on the floor, and if you had a desk down there, you obviously could get in. We had our booth down there, so I could get it. And they used to be able to do that even during the beginning of COVID, and now they won't let anybody on the floor now. So they do have one pitch rating, and they have shields up, and they have to wear a mask, and got to be a little bit tough. But one of the option contracts are trading, and they put up, but the only ones that can go on there are the ones who are trading on the floor. So.
A question for you. You've been doing this a long time. You have trained a lot of traders. And from my standpoint, from what I see and the people that I've talked to through the years, is everybody wants to follow somebody, but nobody wants to learn to do it themselves. Do you see that same scenario, or?
Yeah, well, that's why that's why my goal for our education course is to make sure you kind of find your own niche.
Yeah,
and that's hard to do, because what we try to do is try to explain things to you and help you try to understand what's happening, and then everybody here also has different risk tolerances. It's a lot easier. I guess it's a lot easier to say, okay, I'm going to just give somebody money to trade. But I personally don't like to do that. I have this thing about, I don't like to lose people money. And even if I'm making money, there are days when I lose money, and then those days kind of bother me. So I try not. I don't like doing that. But the goal here is for you to be able to learn how to kind of do this on your own, pick your own spots, understand the market a little bit, and then consequently go and trade it yourself. And if we do a good job, then hopefully you'll be able to pick your spots the right way and find the opportunities that make sense to you as a trader, because that's important, right? I mean, everybody here has different risk tolerances, and you have to, at least I accept the fact that everybody has risk tolerance. I would never tell you to trade the way I trade, or I would never tell you to trade the way Don trades. You have to find your own niche as far as trading is concerned. That's what we try to do. So yeah, definitely people do want to try to follow somebody, but the real goal of a real trader is to do this on your own. That's what we're trying to achieve here.
Yeah.
As much as I've showed you a lot of things, Don, you still do your own thing. So that's what I love about that. And you tell me about it, and I tell you about what I do, and it's kind of you kind of know what I do, but every time you put in your little remarks, I'm like, oh God, there he goes again.
He's off the reservation.
Yeah, there he goes again. Everything I've told him out the window. But then again, that always happens too. I mean, we always have those moments of where, oh God, I broke my own rule.
Oh yeah.
And if you think I don't, I do. Everybody kind of, every time you think we try to instill rules. Yeah, you never tell me. And so you have to, everybody's going to break them. I hate to tell you.
Yep.
It's just the nature of the business. No matter how disciplined you are, there's always going to be a weak moment.
Yep.
And I just don't tell you about them when I have them, because I'm talking to everybody. But we try to keep you away from those weak moments. At least that's what I do when I'm talking to you.
I've used to try and predict directions, and I've finally gotten away from that. Said, really, truly, I don't care, because I have to trade from wherever I walk in and turn this computer on. That is my starting point, whether it be 8:30, 9:30, or 1:30.
Mm-hmm.
And so you have to be able to analyze it, look at it, and I can jump in, but I'm better off if I find a better spot to get in, a level. You're most definitely right. You need a reason. And best best advice I can give anybody is know where you're wrong.
Yeah, find your exit strategy.
Yeah, quick.
Yeah, I mean, at some point, the market is just going to say, well, this is, you just have to accept the fact that you're not going to be right all the time. That's it.
Yeah.
And if you can accept that and then look for the next opportunity, because you will, if you are confident in the methodology, whatever it is, whether it's mine or yours, have confidence in your methodology and then execute those trades according to that, whatever you know and trust. That way, it feels better, and you can look for the next trade.
Just jump in, jump out. Just
right. I mean, basically, that's true.
I find the longer that I stay in the market, the less time I have to be right. Most of the time. Mm-hmm. I mean, even though I had that 17 up there, and I walked in with that bias coming out of the gate, I've been trading it. Well, yesterday I traded it. It just beat me up. Of course, you got to get out. You just can't buy it and hold it. You got to get out if you're wrong. And then I kept repositioning and repositioning and repositioning. I'm going, my goodness, is any of these going to work? And finally, we had a couple work.
And those couple make up for a lot of bad ones.
Yeah. Well, I didn't let it run far. I mean, if I got in a profitable position, I was sucking that stop up to break even, and I got stopped out at scratched the trade several different times.
Right. No, I get it. Of course.
And I'm going, come on, why not take some profit?
Yeah, no, I get it.
But I was throwing one lots at it, and I'm going, okay, I didn't get that one. Back up and get another one. But it's tough to, you keep getting hit in the head. It's kind of like, do I want to stick my head in that hole again?
Yeah, well, we are stubborn.
Yeah.
That's one thing you can say. One thing about traders, we are stubborn.
I never told him I was smart now. Just hard-headed.
Yeah, definitely stubborn. All right, well, blue band there held a couple times.
It did good.
Yeah. Again, if anybody has any questions, feel free to ask in the chat. Any comments you have, just put them in the chat. It is Friday. It's been a crazy week. That's for sure. We absorbed a lot of things in regards to the FOMC, unemployment, and big rally off FOMC, big break here the last 2 days. And again, below 56. 56 is basically the low of the contract here. So we start getting below that. It's going to be, anything could happen. Oh no, we don't hold positions over we try not to even hold positions for like 10 minutes. There was a great trader who one of my mentors when I was trading, and basically in regards to position trading, he goes, there's going to be plenty of opportunity during any course of any day to trade and to find opportunities to trade. That if you're going to take a position, he goes, unless it's going to be a life-changing position, there's no reason to take a position, because as a trader, you don't need those life-changing positions. You need to come in every day, make a little bit of money, and come back the next day. He goes, otherwise, there's no reason to be putting on these trades and keeping them overnight, not sleeping, concerned, looking at your screen, trying to find out what's going on. Unless that's what you'd like to do. But with the volatility being such as it is, you can't. A 50-point stop is like nothing.
I know.
I mean, how do you maintain that position? How do you try to sleep with a 50-point stop? And the reality of it is, you're trying to come back the next day and trade. That's the goal of trading, not to put all your eggs in one basket and that you're trying to come back the next day and make some money and then the goal here for you as a trader, if on an everyday basis, is to make sure you come back the next day. When you put these positions on, and the market rotates one way or the other, and we're getting some crazy rotations, even overnight. It's a little bit tighter overnight, but right now, but still, there's no reason to try to guess what the market's going to do. Just make sure you get back the next day and trade and make some money and move on. Then there's going to be another day after that. So yeah, unless that's what you like to do, if you like to hold positions and trade those, if that's your cup of tea, that's great. There's absolutely nothing wrong with that trading style if that's what you like to do, but that's not what we are professing here.
Used to, I would put on a position at night, put a 30-point stop. People think you're crazy. Now, like you said, 30 points won't do it.
No, it's just not happening.
I said, why do you do that? I said, that's just a safety net, just in case somebody comes out and bombs somebody and the market falls apart.
Yeah.
I've got a net there. Other than that, most of the time, you're never going to get hit.
Yeah. Most of the time, right. But now, these days, it's nothing.
I was sitting there watching that drop yesterday, and I'm going, we're down 150 or 60 points in the ES. And I'm going, I don't think I've ever seen that one. I've seen 80s and 100s, but never this.
You forget the
80s?
No, you forget the COVID, the beginning of COVID.
Oh, did it do it during the COVID?
Yeah. They were talking about limit down, remember? Closing it down if we hit this 5%. They just forgot.
I'm going, man.
That's true. Also, during the financial crisis, though, those are crazy days too. But the financial crisis, though, the market, as far as S&Ps were concerned, we're trading it at 1,000 in the financial crisis. So 5% move there. If you're trading at 1,050-point move, this is how we've become. Now we get a 5% move. It's a 200-point S&P move, right?
Yeah, it's
and before, and this is in 2007 when the financial crisis happened. If 5% move in the market is 50 points. So we've come a long, long way here.
I know. I was looking back. I was trading. We were in the 15 or 1600 range. I'm going, man, what are we doing up to this 4,000 range?
I know.
I thought we lost. I thought they'd lost their mind when they hit 4,000. Then we went to 4,500. I'm going, man.
So, but that's what happens when you have pretty much free money out there. If you look at what's happening over the last 10 years and why this rally's at, basically when you had Trump come in and he had the tax breaks, the market on the day that Trump won the election was trading at 1,800. And then that overnight low, that was the overnight low down to the one, and then they rallied it big time after that. And then they come in with the tax breaks, and that continued the rally. And then you had all this money here. With COVID, it continued the rally. COVID continued. You had a very nice rally into COVID after COVID, once the initial shock was out. So
how is the Fed going to unwind their position? Do you know yet? You have any idea?
Well, they as far as their balance sheet you're talking about?
Yeah.
Well, they already said that they're going to do it at 45 billion a month or something at that rate.
And they were going to start when?
Right away. They were going to start right away. They were going to, because they have to, they're buying all these bonds. And when you buy bonds, you're basically giving the banks more money to loan out and give out. And that's why, again, it's added to the rally. Now they're tightening everything up. And one of the things they're tightening is obviously the money that's out there. And that's what's going on here. So So that money vault that the Fed was doing has created that rally here. What's going to take it to rebound? Well, at some point, the market's going to price in a recession. And remember, the market is always 6 months ahead of what's really happening in the economy. That's how the market likes to. So right now, the market is basically, I think, pricing in a recession. So they'll get to a point where things will settle down, and then you find an area where it consolidates. Maybe it could be between 3,900 and 4,100. Yeah, okay. But wherever the situation and wherever the area is, it's going to consolidate there for a bit. And then we'll see what the numbers does, and we'll see what the policy decisions that they're making now, what it creates. If inflation does start getting tamed down, and then and we can see things are not crazy. The economy, you get another GDP number that's okay. It might be a negative, but at least it's not so bad. And you see some things turn around a little bit. Then the market at this point will definitely start to rebound. But that's going to take a place where the market has to come down, and it has to consolidate for a while. So we haven't found that consolidation area, wherever that might be. I don't know where the market's going to determine that by itself. So once it determines this area here, and then it consolidates, and then you're going to wait and see where we're going to go next. That consolidation period is where, at least as a trader, you get to have opportunities to trade that are not so risky. It's not saying that it's going to be there's no risk, but at least the risk today and yesterday and the day before have been really crazy because of the swings that you're getting. Like here, I mean, you got the hourly bar. These 2 hourly bars on top of each other are 60 S&P points, more than that. It's insane. That's ridiculous. Yeah, but that's what happens when you are the fundamentals exceed are determining or driving the market. The fundamentals right now are driving the market, and the technicals don't mean as much, because right now when fundamentals are leading the market, the technicals are secondary, and that's why we kind of run through levels the way we're running through them, because fundamentals are creating the volatility. At some point, the technicals will come back into play, and the market will settle down, and then we'll figure out where we're going to go next. But until that happens, the market will tell you when things will settle down or when we're going to rebound, is what I'm trying to say.
Did you say that we're going to start unloading 45 billion a month?
Yeah.
In 22 trading days, that's $2 billion a day.
Okay.
Is that causing a lot of this drop?
No, the drop is being caused by the fact that they are definitely looking at a recession, and I think the market is. I mean, they just have. You already had one GDP number that came out. It was a surprise, and Yellen even said that the fact that the GDP number was negative was a problem. She said that on Wednesday, but that kind of got unnoticed because of the Fed doing what they said they were doing. So she knows it's a little bit of a problem.
Now, back in, I guess it was about a month or so back, we got an inversion in the bond yields. It was for a short period of time. And we had discussed that. And, you said when that usually happens, we usually see a recession coming. But very almost within an hour or two, it had already reverted back.
Right.
And that was around 329, somewhere in there. And this market has been on a steady decline to the downside since then.
Right. So what happened is the bond market actually told you what was going to happen.
Yeah.
All right. I mean, basically, they said that this is the recession that we're having. When it inverted like that, it might have been for a second, but remember, the bond market is always ahead of the times. Okay, so it's not like they are. It's not like the bond market didn't know what it was doing. It did. I kept saying the bond market is telling you one thing, even though when the S&Ps were trading at 4,500, bond market was getting tanked.
Yeah.
I go and I've always said the bond market's always going to be right at the end of the day, and that's coming to fruition right now. But it's hard to get short at the same time. I mean, look what happened on Wednesday. You went from 4150 to 4300. I mean, how can you stay short? The 150 S&P point rally. I mean,
yeah.
So trying to find positions like we talk about all the time is very difficult to have positions. All you can do as a trader is make sure you come back the next day and trade whatever market conditions are there. And if today or yesterday the market conditions were too swift and they were going through levels really quickly and nothing was working, then like I keep suggesting, don't trade. It'll come back. Things will settle down. It's just a matter of being patient and waiting. And since we're here every day, that's what we do. We are patient and we wait, and things will settle down because they have to. Because we can't keep this kind of volatility. Can't keep up. I mean,
Yeah.
Not normal.
I don't know if I could stand it. I don't know. I'm getting accustomed to it. I kind of like it.
Yeah. What are you talking about, you liar? Liar. I love this stuff. Even though, again, like I keep saying, the drawdowns are the killer. Right? If you can handle the drawdowns, right, then you can keep trading this stuff, because you're going to get, $1,000 on a one lot is not impossible these days. As much as you lose if you put on the two lot, it's running much faster. So definitely you don't have to trade a lot, right? And again, if your goals are different, then that's great. Nothing wrong with that. If you're trying to make 10, 12, 20 grand a day, then 1,000 lot rotations but you don't even have to trade much to make those rotations, because you can put a 2 lot or a 5 lot at the most. You're getting huge moves, very quick moves. So again, everybody's got different goals, different. You have to be satisfied with what your goals are. Don't worry about what somebody else is doing. Just focus on your what your goals are and what you're trying to make and do. And if you get to that point and you're happy with it, all the best. And that's all that matters. All right. Well, we did get right up to our pivot, by the way, and then we did break. And now, believe it or not, we're going back the other way now. Right? It's amazing, isn't that amazing? We were down a whole bunch of S&P points, and now we're only down 20 S&P points. That is pretty amazing. We were down like 100 S&P points, right? 60, 20, 40, 80. We're down 80 S&P points. Pretty amazing. All right. Well, I want to tell you we got resistance at 30, but again, just the way this is, we're ripping around. I mean, even if you bought the blue band initially, you did good, but then it broke through and then came all the way down to 80 and then just started going up here. Very hard to try to pick where this thing's going to stop and go, rotate the other way.
One thing about it is you don't have long to make up your mind. You get in a position.
You're gonna be right or wrong right away.
Yeah.
That's the one thing that this thing's not is you're gonna know right away whether you like your trade or not.
I'll put my order in there and I'll get filled to put my button on the close button. I'm sitting there watching this, and that's good enough.
Yeah, I mean, it's just amazing. That's how fast it's moving.
You can be 7, 8, 10 points ahead, and 15 seconds later you could be down 15 points.
Yeah, I mean, literally, for sure, absolutely. And that's why we have to be patient and pick your spots, because it's just moving way too fast. And like I keep saying, this is why I suggest maybe not to trade if it's moving too quickly for you. There's always tomorrow. Okay, so the last 2 days I've been saying that. Just be patient. There will be tomorrow when things settle down. I mean, you're trading off of FOMC. You're trading off of the unemployment number. It's absorbing all of that stuff, and you're trading off of a big break. That has to be, we have to come to some kind of consolidation there. Once the market starts consolidating, then we'll see what happens from there. I mean, basically going down to 62 like it did here is basically testing that 56 area. I mean, obviously the market sees everybody sees the 56 as low there. So, you have to think that that's what it just went down there really quickly to go retest, and it did.
Everybody be jumping up and down saying, "It hell, let's go up."
Yeah, it's basically what it did here. It kind of held that area there, and now we're coming back up here. I mean, I wouldn't be. Would I be surprised that if we go from 40.62 to 41.62 today? Probably not. Who knows with this stuff?
It seems like when you miss it by a tick, it's usually always a good move.
Yeah. Well, yes. When you miss by a tick and the market rotate and you had an entry point, yes, there's always a good. And then you have to. And the hard part is to cancel that order now, because you're like, oh, it's going to go back down. I'm going to do the same thing. It ain't going to do the same thing. You get filled. Not if you missed it by a tick or two. Even a point these days is not a big deal.
Because I had an order sitting at 62 and I didn't get a fill. I'm going, man. What was it yesterday? We both got caught at that, 36 or somewhere in there?
Yeah, up on top, 37, yeah.
And it's kind of like streetcars. There'll be another one along in a minute.
Oh yeah, that's what you, again, that's why you have to keep your you gotta keep your patience, obviously. Sure, you could do a monthly. There's nothing wrong with that either. That's not a problem. It'll get you. It's up on. There is a monthly link in addition to the quarterly one. If you just scroll up a little bit on that last link that he just sent out to everybody, there's a monthly and there's a quarterly. So if you want the monthly, you can definitely do the monthly. And the volume. All right. Again, we also focus on the morning hours to give us our opportunities to trade. We feel that those are the best hours for us to trade. Obviously, these days there's volatility all day, but again, we've been also telling you not to trade today. So at the same time, it's kind of doesn't really matter at this point because the volatility is there. But you have to be very careful there with the movements these days and these markets. Things will settle down. I keep telling you that, but I will say that they will settle down. That's all I can say. Uh, Tim, what do you think? I actually do have. First of all, let me tell you something. For the last 3 weeks or 4 weeks, I've been looking ahead, my 10-day forecast weather, and nothing was getting above 45 or 50, right? Nothing. And the rain, of course. Okay. So last week, or a couple days ago, when I saw this, I'm like, this is real? I'm like, hitting my phone, make sure it's not going to put 70s and sunny. And like, what? Get on the, already got, you know what? I just want, I went to, that Heritage Oaks. Have you gone there? Yeah, the old Sportsman's. You got to go check it out. They redid. They spent a year and a half redoing the whole. The course is different. I haven't played it. I'm going to play it on Monday, but they had the hitting area there. They redid it, and they have these you get this app and you got a tracker, and you can track your shots as you're practicing in the range. And the clubhouse is new. The courses they changed it a little bit, so you got to go check it out. It's a very nice range area, hitting area, and then you have you hook up this app to your phone, and there's a tracker, and you can follow what your progress is of your shots. It's kind of cool. All right, so thanks again. We, like I said, focus on the morning hours. So hopefully we try to help you here a little bit. We can see we're kind of rotating back up here a little bit. Not surprised that we are getting a little bit of a relief rally here. What are the institutions doing? That was the question. I would venture to say that they are leading this kind of break, at least lightening the load of their positions at the very least. You're not going to get these kind of moves without institutions jumping in, because the volatility and the volume is just too great. There's probably some that are repositioning, ones who have cash. Otherwise, I think over the last certain amount of time here, they're definitely, again, you don't get moves like this without institutions adding to the fray, so again, you're dealing with such big money at those guys that it's hard to try to quantify what they're trying to do easily. But you would think, and like I said, there's no way that some of these moves are happening here without the institutions kind of going along with it, because it's just you have to. I mean, you can't have these moves here on nothing. So that's what I'm thinking in regards to what the institutions are doing. All right, again, we got up here to the 40 area here. We have 39, and coming off here a little bit. Again, if you're going to trade, be nimble, find your spots, just be patient. I very highly suggest not to trade. It just seems like it's at least for a time being, because the preservation of capital for us is important, as you can imagine, so be patient and wait for opportunities. They will arise. All right.
A question for you.
Yeah.
At 10 o'clock, where should our normal volume be at? Around 5,000?
10 o'clock?
Yeah. Or is it normally going to be?
Yeah, no, anywhere between 5 and 750. Yeah, and obviously we're over 1 million right now, so you can see. And again, speaking of institutions, you're not going to get this size volume if the institutions were not participating with us, as you can imagine. So there's definitely some participation going on there with the with everything.
Yeah, Mark's probably recuperating from Legoland.
That's an understatement. Yeah, that's an understatement.
The grandkids have been, they love it.
Yeah, they do love it. So, but
I think that's why you have children when you're young, so you can keep up with them.
I'd say, I tell you, those. Well, yeah. I mean, that's for sure. I mean, the patience. It's nice that when I see my grandkids, I can say goodbye to them.
Yeah. Well, I got a question for you. Has your wife got to the point to where she's kid proof in the house yet?
No.
That's coming.
No, but we do have a crib in the we have a crib already in the house for whoever stops over.
Oh, okay.
Yeah.
Oh yeah, you never know when they're gonna stop by, so you got to have this stuff.
Right, because you want them to stay more than 5 minutes. So I tell you,
it's amazing.
It is. It's amazing that how they're growing up and everything. So
you blink an eye and look at your children. They were just little the other day. Now they're married and got kids of their own.
That's a scary part. I get it. It's like, really? Yeah, that's what's happening. It is amazing. How can I tell you? It's life, right? We're just getting old. We appreciate it more.
Yep. What's the old saying? There's a lot of people come in and out of your life, and some stay a little longer than others, but every one of us write our own history, and they become part of our history.
Mm-hmm.
And
that's true. The dark pool activity. What is a dark pool?
think that's what it was yesterday. It was just a big dark hole. Let me see some light.
That's hilarious. Oh, okay. Okay. Well, I don't know if it's secret, but you're right. I understand now. Okay. So it's the trades that are happening that they match up. It's not secret because they still match up. But yeah, I understand what you're saying there. Yes, that's what they unfortunately the exchanges have created that, like, these stupid ideas there that that it's okay to match up some trades. Unfortunately. It's all right for them to match up these like big block trades. And they're the only ones that know about it. That's the sad part. That's totally, I don't know about dark pool, but it does come out at the end of the day. They do talk about it. They just don't tell you right away. Yeah, there was when they first started doing that. Are they okay to do it? It was like a big deal that it shouldn't be done that way. But obviously they don't care about anybody else. But okay. I like the phrase dark pool. I like the way that people have described that. It's just the block trades that are happening that you don't hear about. That's all. But I do remember when they first okayed it, that it was like, come on, you're not really going to do that. Where's the transparency? But they didn't care. Look, you got to remember who are making the rules. The rules are the institutions, right? They make the rules to the exchange, even though they're not supposed to. But they make the rules to the exchange, so they want it easier for them to. Well, I don't want to show you. I don't want to show the other guy what I'm doing. Oh, but yeah, we'll just match it up, and then nobody can know about what either one of us are doing. And that's why, going back to the question about the volume, that's where you get this like huge volume that's happening, because there's some big trades happening behind the scenes that you don't see. All right. All right. So again, we can see here the market is kind of rotating. It's kind of very, very fluid. Like I keep saying, be very, very patient. Hard to say where this thing's going to stop. I wish I could tell you, when we were trading and when we're trading actively, we're looking for areas where the market, we know that the technical areas that the market should hold. But with the volatility where it's at and the fluidness of this market and the VIX being at this mid 30 area, you have to be very careful here as the fundamentals do overtake the technicals. And so you either have to find your areas that you know worked before, but then expect to have a drawdown. And whatever the situation is, make sure you keep your stop in place, because you just have to. There's just no other way to control this market if you're wrong. But if you're right, you get to ride out some of these trades as well. And but like Don was saying, even sometimes you have like 6 or 7 point profit on it, and next thing you know, it becomes even a loser, right? So you have to be mindful of the dynamics of the market, and trade it cautiously, and be very patient with the trades that you're getting yourself into, and how you're managing those trades, obviously. So, all right. We'll take a little bit of a break here. If anybody has any questions, put them in now. Otherwise, be patient the rest of the day. Again, we focus on the morning hours. We feel that obviously with the volatility the way it's at, you're going to get some trades all day long. Be patient, pick your spots. We had the 39 level here. We got right up to 39.75 there, and then backed off a little bit. So the levels, you have to, if you're going to trade them patiently, and keep your stops in place. Whatever trades you see or you feel that you like, and again, there's many price action opportunities that are out there. Just pick your spots and find those opportunities. And if you like what we're doing here, if you look at the chat, you'll see a monthly subscription as well as a quarterly subscription, where you save a little bit of money on the quarterly. And we're here every day. Obviously, we like trading. This is what we do. We enjoy obviously, I enjoy what I'm doing, and like to share those trades with you if they're there. And also, when they're not there, we tell you to be patient and wait for them. For me to tell you not to trade is a big deal. I can honestly tell you that. I am not one to tell you not to trade. It's not in my DNA to tell you not to trade, but that's what I'm telling you to do, because we like the preservation of capital. That's even more important. All right. With that, we'll take a break and get back in a bit.